Hello traders, this is Rich from tradesight. Just want to take a few minutes here and review a trade that we had this week. This is in the GLD ETF. This tracks the gold futures as an ETF, so this is something that even equity players can use when gold is in motion. It certainly has been the last couple of weeks. We saw a lot of back and forth with the debt limit procedures going on in Washington, and what was really happening was we were starting to develop pretty decent downward bias here. Detected this falling wedge pattern. Let me illustrate that for you. All right, so here's a look at the chart with that falling wedge pattern applied to it. You can see that the market players, have been working up in this area. That area had been taken away from them on this this large gap down. And the sellers kept selling rallies here and pushing this thing lower. And as it was starting to reach towards the apex of this triangle pattern, kind of alerted us to the fact that we were looking at something that could be a pretty nice little breakdown. We had this this pivot right here, which is the indicated here by the yellow arrow, and that kind of set up the trigger. So what you really have to do is you have to find a viable trigger, and certainly one was revealed here in the pattern. And they don't always set up this clean, but this was one that you didn't want to miss, and we certainly didn't miss this when we posted it to our subscribers via the messenger and the Twitter feed. So they were alerted to this well ahead of time. So this is how things were setting up. What we did was we took the low here from the morning, moved up to try and fill this gap. Didn't quite fill this gap on an absolute basis, but this low on the day was a short trigger. That was 124.97. So when this ETF broke down below the 124.97, a lot of these longs that were trapped up here were probably going to wind up being forced out of the market by stop losses. And certainly we had a very linear break to the downside here. This is the 15-minute chart, and it closed at or near the low of the day. So there was an easy partial opportunity on the way down, and closed at or near the low of the day, which was the green light to carry some over if you're actually a swing trader, not just a day trader. And then the subsequent day we had a follow-on gap to the downside, essentially just to reprice this so that these sellers could get out somewhere where the longs were willing to take it. And this is where we sit on Friday. So we're certainly well within the money here. We're about $2 in the money on this right now, as of the close from Friday. So really nice trade. You definitely want to look for a pattern, and when you have a clean trigger that sets up like this, those are the trades that you don't want to pass on. Even if you're away from the desk, these are the kinds of things that you want to have a stop loss in to get yourself into the position. Just keep in mind that the stop losses are not only for exiting positions, but they're also for triggering yourself into a position when you see an appropriate pattern. So be sure to use that feature on your trading system. All right, folks, was just another educational tidbit from tradesight. I thank you for listening, and this has been Rich for tradesight.